Hey everybody, I am glad to finish off the week with you, with the trading week that is. Time for Market Movers. My name is Brent Moores. Glad to be with you, whether you're watching live or on a recording. I'm joined by Mike Fairborn, who's helping me out in the chat. So between Mike and myself, we'll do our best to help you out. You know, Mike's a good friend. I've known him for better part of a couple decades now, and he's not just very knowledgeable in the trading and investing sphere, but just a good person. So make sure you follow him on Twitter, or X, I should say. I should be used to that by now. And me on X, at Brent Moore CS, at Mike Fairborn CS. Now, there's a few disclosures I need to go through before we get into this. The information today is for general informational purposes only. It's not an individual recommendation or personalized investment advice. And we'll look at specific securities today, but those securities are not recommendations. And the Paper Money software application is provided for educational purposes only. It's a great tool, but it is just for educational purposes. Schwab does not recommend the use of technical analysis as the sole means of investment research. Past performance is no guarantee of future results, and there's no guarantee of an execution of a stop order is going to be at or near the stop price. All investing involves risks, including loss of principal. What do we do in this webcast? Well, we talk about the general trend of the major market indices, what moved the market this week, preview of next week on some things. So let's get to it, folks. Let's get to it. This is the S&P 500. We hit, albeit very briefly, an all-time high today on the S&P 500, and we've seen that recently the last few days. That's what we've seen. So that is you know, it didn't last, but down not much. Okay, and you know, we're going to talk a little bit about the PPI report that came in on Thursday. That was yesterday. Not, you know, the market's resilient, and we've seen that. NASDAQ, resilient, although we didn't hit an all-time high today. Still, we're right near the all-time high. So NASDAQ's been real strong. Russell 2000 did react a little bit more down from that report, but still doing well. We had a high back here several months ago in February, but it's climbing its way up. So the markets are doing well. And let me just point out one more, because that I find interesting that I don't always look at. And this is the Dow. So the Dow, you can see, hey, look, we jumped up about 2.2% today. It was the top performing index today. Well, a large part of that is one of its constituents is United Health Group, which was up 12.5% today. And we'll get to that as well, because there's some big news around that. But when you have an index with only 30 components and one of them's up 12.5%, that tends to boost the performance of that index there. So I'm gonna, let's talk about that right now, okay? Why is UNH up so much? Berkshire Hathaway, okay, think Warren Buffett, right? Berkshire Hathaway is buying a 5 million share stake in United Health Group, okay? Now, that's not like a massive investment for them, but it's kind of a vote of confidence. You know, think of Warren Buffett, think of the ideology of trying to find companies that are distressed. And believe me, United Healthcare has had a rough time. If I go here to, say, a 3-year chart on this, you can see how United Healthcare has gone, particularly in the past year. But you can see how much they've lagged there. But this is the relative strength over the past 3 years, and it's just gone down. So it's really underperformed the market, really just it's gotten hammered here. We were at $600. We're at half price, basically. That's after the jump up. We're at half price of where it was back in April. That's not very long ago. So they've had their woes, but when you get the blessing, so to speak, of the Oracle of Omaha, then you are, it tends to help your company out. So now, Berkshire didn't just buy United Health Group, it also bought some other stocks. Let's just take a look. So they added their positions in Lennar. This is a home builder. Nice big jump up, kind of retraced throughout the day somewhat, but still up 1.5% or more. Okay, nice big run up on Lennar. Other companies that Berkshire took a stake in. D.R. Horton, again, kind of like Lennar, but both in the same space. Big jump up, sold off a little bit, but still up 1.5%. Obviously, well more than the rest of the market. Nucor, okay, big jump up, same theme, okay, and it fell back a little bit. And Lam Research was another company that Berkshire, what's my ticker? Is that right? LAMR, I think. Okay, up 1.8%, almost 2% today on that. So those are some market movers there for you today on that. Let's move on and talk about some others that are in the market, and then we'll get back to some other indices and stuff like that. But Intel was another mover, and this one, you've heard the news. Well, Intel kind of started off about a little over a week ago, maybe. President Trump mentioned that he felt that the CEO of Intel, which has been a chip company that has been, Intel's history. I mean, Intel was the chip company for like a couple decades, but the last few years, it has just not done well. It has woefully underperformed some other companies. And if you look at semiconductors in general, like NVIDIA, they've just done great. I don't know what the future is, but they've done great. AMD, if you look at the chart on AMD, they've done great. Intel, not so great until about a week ago or so. Well, President Trump mentioned that the CEO needs to go because of supposed ties to Chinese business, I think. But the big news today was that it looks like the federal government is likely to take a stake in Intel. That's very unusual. I probably don't need to tell you that. It's not common the federal government takes a stake in companies. Now, it's not unheard of. If you think back to like Fannie Mae, Freddie Mac, that's happened. The federal government has in history taken a position in auto companies in terms of that. So it's happened, but usually it's kind of in times of like financial crisis, So I guess you can maybe also say there's maybe a national security stake here in this. The theory is that Intel, they have more domestic manufacture of chips. And so, I don't know, you can read more about that if it is of interest to you, but that's a market mover today when we talk about stocks and market movers. Okay, we'll hit some other stocks up here in just a little bit, other market mover stocks up in just a little bit. But I also want to talk a little bit about some other things, such as interest rates, because I think it's important. Yesterday, we came out with the PPI report, okay? Producer Price Index and its inflation gauge. It's not probably the most important inflation gauge, not the most watched, like the PCE report, or even maybe the CPI. But with it coming in as hot as it was, I think a lot of people would have expected maybe a little bit more of a sell-off in the market, which we didn't have. It didn't have, even though it was a hot report. And of course, the concern with that is the whole interest rate trajectory expectation. Could that change? Well, let's take a look at the Fed Watch tool here. So let me go right here. And that's not where I want to go. Here's the Fed Watch tool. So this is looking at Fed funds futures. This is a third-party site, CME Fed Watch. You can pull it up if you want yourself. This is looking at the September meeting. It is still factoring in almost a 90%. So that didn't change. That actually surprises me a little bit. That didn't come down at all. Well, it came down a little bit, maybe a few percent, but not that much. And so still the market, now this has come down a little bit over the past day, a few percent more over the past day. But because yesterday I think I was looking, it was like more like 95 or 94 or something like that. But so it's changed a little bit, but still odds are we're looking at that rate cut there, okay? So in September. Now, how many before the end of the year? Let's take a look. December. And of course, these are just kind of probabilities. Certainly no guarantees right now. Right now we're at 425 to 450. That's here. So it's basically saying there's very little chance we don't have a rate cut by the end of the year. One rate cut, 15%. Two rate cuts, 45%. Three rate cuts, 37%. So we'll see what happens. We're going to hear more about from Chairman Powell next week regarding that. Okay. So speaking of which, let's go to the Schwab.com website. I'm going to go to the economic calendar. If you want to follow along, if you ever want to find this, you can go to research, U.S. markets, research U.S. markets, and then it's kind of on the right, economic calendar. Let's talk about what we saw this past week and then what we have coming up the week ahead. This week, kind of big news. A few things, a few reports that were significant, I think. One was on Tuesday, inflation report, kind of good news. This kind of came in right in line. Okay, market expects actual. That's the CPI report. I was supposed to circle that. It didn't quite circle. And so that was kind of one big thing we were looking at this week. That was good news. Okay, market expectedly would have liked that, and it wasn't great, but it kind of met expectations. This is when I was talking about the PPI report came in hot, 0.9%, both on core and headline. The market was expecting 0.2%. That's not just a miss, that's a pretty big miss. The market doesn't seem to care. I don't know, is that an overstatement to say the market doesn't care about it? The market didn't react that negatively to it. Initially, kind of maybe a little, it promptly resumed its, I don't know, what can stop the market? I don't know. Right now, there's not much, it seems like. But who knows what the future is going to hold, okay? That's not a prediction of the future. That's just what's been happening. Retail sales came into this. Was another. Last week in this session, which we did, we talked about three things, maybe four. We talked about the CPI, the PPI, we talked about retail sales and consumer sentiment, I think. Okay. And obviously inflation was a big thing. We talked about that. Retail sales, actual, market expects. It came right in line, retail sales. One positive thing that came out of that is they actually went back and revised the last month's number upward. So do you remember, I'm confusing my weeks now. I think it was 2 weeks ago where we had that labor report and the non-farm payroll report where they revised the previous month's way down, which wasn't good. This one, they actually revised the previous month up. Okay, so that's a good thing, I guess. And consumer sentiment, probably, I don't think this really affected the market that much. I don't know. It was a little bit of a miss on that. Okay, coming up next week, what do we have? What are the big reports we have next week? It's more Fed stuff than anything next week, I would say. Nothing of significance on Monday. On Wednesday, though, we have Fed minutes. That could potentially affect the market. There's another item that is not on here. The Jackson Hole Summit, so what do you call it? Jackson Hole Retreat? I can't remember. Summit, I guess is what you call it, okay? I better not spell that out. I'm making a mess of that because this pen isn't writing. But but Chairman Powell will be speaking on Friday. So it's not listed here, but that perhaps could move the market more than anything, to be honest. I don't know. We'll see. The other thing I would mention is this. We have services PMI and manufacturing PMI. Those are the ones, I would say these four items could potentially move the market next week. We'll just have to wait and see what comes out of that. Okay. Before we go to earnings, let me just I know I'm not going totally in order here on this, but let's just look at a couple other things here. I wanted to show you what I think it's an important thing in the market to see what gold is doing. Okay. So here is gold, and it had a stretch, didn't it? Like if I go back to say a year chart, I mean, that's actually probably even, let me go 3-year chart. Okay. You can see that strong run up we've had in gold. Now, if you go long term, let's go 20 years. Or let's go 20 years. Here's 20 years. The way it's worked is it's had periods where it just kind of went crazy, really strong, and then a long stretch where it didn't really do anything, little period, and then sideways, and then a period of where it's been very strong. Of course, this was a time of high inflation, and gold was is often considered to be kind of an inflation hedge, okay? Well, so the question is, are we changing now? Is this starting to flatten out for an extended period of time? I don't know the answer to that. But gold's been our moving averages, 20 and 50-day, are kind of more sideways right now. There. Oil. Again, we're not talking about trading this. This is just looking at the commodity as a market gauge in a sense. Oil. Well, what can move oil? Well, one thing, the results of this Trump-Putin meeting, I don't know if anything's going to come out of that or not. I don't know any more than anybody else, and certainly less than some people probably on that. But that could move oil markets. It could. If there is kind of a cooling, a softening in, I don't know how to say this, an easing maybe of the relationship there, of the tension, an easing of the tension there, could that potentially open the markets up to Russian oil more? Yeah, that would tend to add more supply to the market and would tend to help lower oil prices there, which in turn, remember, oil prices are a big input in terms of inflation report here. Okay, let's hit up earnings here. Oh, actually, let's just look at a couple other things. Crypto. Here's Bitcoin. Okay. Again, we're not talking about trading. All we're doing is looking at what crypto's doing. Crypto's been trending up. It's been strong. It's been kind of, I don't know if I'd call that a flag, because the flag, it's a long sideways, but it goes sideways up, sideways up. We've had this nice trend, and we're right at that 20-day moving average, and we're a little bit below that 120,000 mark. Peaked out a little bit higher this week at 125,000. But this volatility is pretty typical right now for Bitcoin. And finally, before we go to individual stocks, let's just look at the VIX. How's the market feeling? We hit a low on the VIX since I think it was last December of 14.3. We're still in the 14s, barely, but market seems to be, if this is a fear gauge, not that much fear in the market right now, okay? Relative to where we've been, and that's how it always is. It's always relative. When we're looking at the VIX on the market, or VIX implied volatilities on individual stocks, it's always relative to that stock. Okay, calendar. Here's earnings calendar. You know what? I'm not going to go through the earnings calendar, but let's just talk about some of the stocks here that have had earnings. Over the past few days, Deere had earnings. You can see it, the market didn't like the earnings, okay? It's starting to recover a little bit now, a little bit of an engulfing, bullish engulfing here, but will this support hold? For some traders, what they do is they'd say, we're going to take the low of this pattern, okay? The low where we did that overreach there, and say, look, maybe, can this fight its way back up into the channel? I don't know. A break below here would be a very bearish sign. If some bullish traders, if they decided they wanted to trade Deere here, one nice thing about having this kind of solid support level is it gives them often a place to put a stop loss, below the support, in other words. Now, stop losses don't guarantee to get you out of any particular price, but that's how that works there. Other companies that had earnings this week that are moving. Cisco, down almost 5% here. And this could certainly be a trend changer. You know, when we talk about the markets, you know, when you're looking at a stock that's trending up or trending down and going, when is the trend going to change? Very often, it's when that earnings occurs. We had that earnings. That's a break of a pretty substantial, I would think at least, support level there. Not only below the 50-day, but below our two bounces there, and we close near the low of the day. That's not a strong sign for Cisco. And one other company that I think is worth noting of earnings here, this is Applied Materials. So this is kind of in the semiconductor space, but this isn't actually a chip manufacturer. This is a semiconductor equipment manufacturer, down almost 14%. That's rough. I don't know. If you're a trader on this, if you're still in it or something, what you want to see is you want to see the low of today, which we're right near. You want to see that hold. In fact, if you look intraday on that, it just crashed and stayed down there. Okay, so Applied Materials is not so hot. Coming out next week with earnings. You know, it's not the biggest week of earnings. Home Depot is one of the bigger names. We'll see. Lowe's, but I mean, Home Depot has had quite a run lately on this. I'm going to kind of go a little faster here because I'm running out of time. Lowe's, same thing. These home, what do you call them? Home improvement stores. Clearly, the picture is improving on these. Now, I don't know if there's a prospect of maybe. I don't know. I can only speculate on that. But these have jumped up in anticipation of earnings. Of course, maybe there's a higher expectation with earnings here on this. Here's another company that's coming out with earnings this week, and it's Target. And that's in the news, okay? Target is in the news. Number one, they were downgraded by Bank of America, okay? It seems to be, it's down a little bit, okay? Down a little bit more than the average stock in the market. Target has sold off, downgrade. They have earnings next week. But think about Target and do this. Let's look at this. Compare Target to Walmart here. And I'm just going to go to a 3-year chart. And Target is down 38% over the last 3 years. Who's their biggest competitor that you think of? When you think of Target, and you think of competitors, you probably think of Walmart. I do, at least. They've been traditionally compared to each other. Target down 38%. What do you think Walmart has done over the past 3 years? Not down 38%, I'll tell you that. Up 119%. That's a crazy kind of divergence there in the fortunes of Walmart and Target. By the way, Walmart has earnings coming out next week too. That could certainly affect the company significantly. One thing that affected Walmart to a certain extent here and other companies was Amazon this week. Amazon is upping their, what do you call it, fresh produce game. They're going to be increasing that. They announced that a few days ago. Well, look at how some companies react to that. Look at Kroger, competitor, obviously. This was Kroger's reaction to the increased potential competition from Amazon. Probably makes sense. That's a pretty big drop. Walmart, a drop. It dropped on that to a lesser extent, but still a significant drop. Target, not so much. What's the reason? Well, think about it. Walmart, the majority of Walmart sales is grocery right now, okay? That's not the case for Target, all right? And there we go. I think that is, we are out of time, folks. Let me just finish up with this. Companies with upgrades, CRM had an upgrade. Downgrades, well, we looked at the earnings. Applied Materials, downgrade, probably not a surprise. Cisco, we looked at earnings. Probably not a surprise that we had a downgrade on that. Target, Bank of America already mentioned the downgrade on that. Okay? And with that, I think we're going to call it a wrap for the week of trading, everybody. Thank you so much for joining me today. Thank you, Mike, for helping me on the chat. I wish you all a wonderful weekend ahead and next week as well. And we'll see you all same time next week. Bye-bye, everybody.